Welcome back, dear traders. Let's discuss developments in the US financial markets, key events and ongoing trends. The major US stock indexes crept upwards last trading week. Wall Street is opening a new week on a pessimistic note. The Dow Jones closed flat on Friday. The Nasdaq incurred heavy losses of 1.3%. The S&P 500 inched down 0.27%. To close at 4,476 points. The index will hardly develop a rally, though technical indicators suggest a minor upward correction. The index is expected to trade in the corridor between 4,450 and 4,520 points. The stock market gave a muted response to the minutes of the Fed's policy meeting. Market sentiment on Wall Street is dampened by the prospects of a rate hike of 50 basis points in May and withdrawal of $95 billion from monetary stimulus. A series of macroeconomic data that is due this week might cement fears or calm down investors. According to the consensus, the annual rate of US consumer inflation could have jumped to 8.5% from 7.9%. If the prediction comes true, investors will be convinced in the Fed's aggressive monetary tightening with the fast rate hikes not only in May, but at later policy meeting. Besides, later this week, top American companies will begin reporting on corporate earnings. Large US banks such as JP Morgan, Goldman Sachs, Morgan Stanley and Citigroup are the first to provide financial reports, though analysts are braced for poor data. Market sentiment is worsened by escalating geopolitical jitters. Obviously, the talks have come to a gridlock. There is a slim chance that the parties will come to any peaceful solution. It means that the market does not have any drivers for bullish momentum. The only catalyst could be either geopolitics or statistics, which might be better than expected. Meanwhile, mounting uncertainty of the lingering military conflict is feeding the US dollar's strength against its rival currencies. Its index is hovering not far away from 100 points. It has not been able to settle above this mark. Nevertheless, the pre-market suggests further growth of the world's reserve currency. The expected corridor for the US dollar's index is seen between 99.70 and 100.30. All in all, analysts are bullish about the US currency on the back of the hawkish US Fed. 100 leading economists were pulled over the weekend. 85 of them predict a rate hike of 50 basis points at the policy meeting in May. Remarks of some Fed's policymakers last week also dispelled doubts about a faster and sharper pace of rate hikes. And in this context, yields of US 10-year treasuries surged to 2.7% and haven't topped the two-year high. This also props up the US dollar's rally, and this week investors will find out data for analysis. The US CPI is due on Tuesday and the US PPI will be on tap on Wednesday. The data might impact market sentiment. The USD CAD pace trading higher amid the firm greenback and sliding oil prices. The currency pair rebounded to the March levels to trade at 1.2610. Analysts project the corridor between 1.25 and 1.27 for today. The price will hardly leap. The USD CAD pair is likely to trade sideways. And this week, the Bank of Canada is holding a policy meeting. The regulator is widely expected to raise the overnight target rate by 0.5% on Wednesday. Moreover, analysts are certain that the Bank of Canada will increase interest rates not only in April but also in June. And this forecast is based on the recent upbeat employment data. The number one cryptocurrency is dropping like a rock. Bitcoin fell to settle above $42,000 and lost $100,000. At the moment of recording this video, the flagship crypto was trading at $41,020 25 points. The downward move in the pre-market and the correlation with the stock market sets the stage for a further decline of the digital token at least to 40,746 points. The price could rebound to 42,000. Analysts do not indicate any signs of the uptrend, and technical indicators suggest that the corridor between $34,267 and $42,000. Tomorrow, the US stock market could perk up following the US CPI. Wall Street is likely to trade in the red today, and we wish you gainful trading at any trend. And see you tomorrow.